What is up, everybody? Logan coming at you guys with another video, and today I'm joined with Halcyon Trader. Like I said, I want to get him back on the channel more. You guys have been asking a lot about him lately, and today we're actually going to talk a little bit more about how to become a full-time trader and like sustainably do it. And there's a couple like mindsets, I think a lot of people should go over. But in my opinion, I think a lot of like becoming a professional or full-time trader stems from just having the capital to do that. You hear a lot of people who say like, "Oh, I'm gonna do it with 20 grand," and this is gonna be my full thing. And it's like, I think,
Wrong.
yeah, exactly. It's just too difficult at that point, right? You just don't have enough capital. But I just wanted to say that right out of the gate. But I do appreciate you coming back on Halcyon for this one, and excited to see what you got for everybody.
Yeah. Yeah. Get your pens out. This will be the 5-step plan to trade professionally as a living. Step one,
Don't.
attempt to do it on your own and then lose all of your account at least once or twice. That seems to be the flavor of how this goes. I'm definitely in that category. I've done that before in my early full sending days back in the early 2000s when I first got involved in trading. But these are the things that I would say I've learned over the time. I do this full time. This is what I do to make my living, and so yeah, I'll walk through things that I've learned throughout this process. Maybe some obvious and some not so obvious things. So while we're going to stare at a chart here and look at your head bobbing up and down with the beautiful scenery behind, I don't
Yeah.
have a ton of things other than I'll wiggle the mouse occasionally for you guys. As we watch this really impressive 2% day rocking and rolling here. Um, so I will say the first thing is really you need capital, and there are the unfortunate thing with trading in the world of trading is much like many of the get rich quick schemes. You have people tell you that you can do this on small capital and make a living off of it, and I'm telling you, that's not reality. Um, there's some ways you can go and run your own measures of this, but this requires a pretty significant level of due diligence on your own to look at yourself and say, do I know exactly what it takes to run my life, to the cost of my life, what it is? Have I looked my own detailed budget of myself? What do I spend monthly regularly? So I mean, you literally, if you're going to do it for a living, you have to know what you got to cover before you even grow the account. What do you need to cover in order to cover your expenses? And for most people, that's just not realistic. Or you can live like an absolute, homeless person uh, if you want to do it off of, like, say, a $50,000 account or $100,000 account. So again, living off of it, unfortunately, this industry is pretty prohibitive on letting somebody just take 50 grand and go live off of that by generating income off of the account in various ways, whether that's options or stocks or otherwise. So that's probably the first thing to think about that. Now, certainly there are some interesting avenues with prop firms these days that would, if you can qualify, might pay you a chunk to trade their own capital. Uh, but again, that sounds great, but there's a lot of catches with that too. So anyway, capital is the big part. And I think as any trader has ever done, who's ever gotten to a place where they've been doing this longer than a year or two, is you come to a realization that, and this saying is absolutely true because I've personally been utilized and gone through probably most strategies that are out there. I've somehow have some hand in the mix or have tried it myself or whatever, and paid a PhD level worth of cost in terms of learning my own education on that. So I would say one of the things as it relates to that is most people when they first start are do such outrageous levels of aggressive trading that what they do is so incredibly unsustainable. I suspect some people listening to this right now land in this place of taking trades that are just the risk reward is completely insane, and it's sort of like that whole thing you get into when you're betting and doing gambling, where yes, you can potentially make 10x your money, but the probability of that happening is so small that that it's not worth pursuing it that way.
Mhm.
So As it goes to actually the saying, right? There are old traders and there are bold traders, but there are no old, bold traders. And that is absolutely true. I don't know anybody who has been doing this long term that trades like somebody who started a year ago, where they're just full sending accounts on positions. Um, I think a professional trader, well, I know this to be back. Professional traders focus on what their risk is. They don't focus on what their profits are going to be. Now, yes, you need to know if what you're doing is going to have a positive expectancy on the other end. And that can only be done by actually measuring and regularly documenting. You have to document your trades to see what works and what does not work. Another very obvious sign of somebody who's doing this long term is they document everything. They document and document and document, and they will add a win. You ask them, and immediately they can pull up a spreadsheet showing every trade they took, why they took it, what were the parameters of getting in their trades. Amateur traders don't do that. They're jumping around from one strategy to the next strategy so often that to track, oh, by the way, I'm trying the next, name random ass strategy. And so there's no consistency or continuity with what they're doing. So it's really hard to glean and get any information as to what is working and what's not working. Because when you go run, like, say, your back test your last 100 trades and say, I'm looking at, do I have a positive expectancy out of these last 100 trades? It's really hard to see that when you've done 7 strategies in the last 100 trades. So maybe 2 of those strategies would have worked over 100, but what you find a lot of in fact, most amateur traders do this, is they try something for 5, 6, 7, 10 trades. They have the one time it doesn't work out, or maybe they get unlucky and 2 or 3 times into the second or third trade doesn't work, and they just immediately run to the next thing. One of the things that professional traders do is it's viewed as a business. 100% viewed as a business. It's a method to make money. It is not a method to get a dopamine response by getting into a trade. A lot of amateur traders, and I personally have experienced this. I know you have experienced this, Logan, that when you first started get into this thing, there is an absolute adrenaline rush getting into trades, and learning to completely mute that and take that away, whether that is getting in or out of a trade, is absolutely a skill that requires you to pay a lot of attention to that. Okay. Many people create a negative pathway with that, unfortunately, where they get into a trade, especially a probability-based trade. And this is probably not something that's talked all that often, but they get into a probability-based trade, so like an expected move style trade, and it goes against them and tests them. Right now, the basis of expected moves is that you need to allow the probabilities to work themselves out. Not the moment it gets tested, you bail. And so a lot of people, what they end up doing is they put on these trades, and then the moment they get that pressure on them where the trade goes against them, whether that's, doesn't matter if it's up or down, but it goes against them, right? The trade's going against them. They have like this, like a negative dopamine response where they get a big dopamine response by closing the trade so that they don't have to experience that pain anymore. And it creates this kind of negative loop when it comes to managing your trade, where now your risk management has literally nothing to do with actual logic or math, and it has purely everything to do with, I don't like this feeling that's happening because I'm being tested, and I just need to get that feeling off of me so I can have that come down feeling from the adrenaline that's I'm getting smacked right now on this trade, right? So that happens. That is an amateur thing that happens that happens pretty regularly, and it's something to be paying close attention is, especially the next time you get tested in a trade. Write down what you're feeling, what's going on in your head internally, and that will help you move out of the emotional state and start moving into the logical state. And Logan and you, I talk this a lot about. You try everything you do to tilt the odds that all your decisions when it comes to trading are based on some kind of logical, repeatable, consistent process you're doing. Again, amateur traders don't do that. They do not have consistency at all. And if you were to look at, say, somebody who's really struggling, who's having makes 5%, loses 5%, makes 10%, loses 10%, and they have this really choppy equity curve where it's make some, lose a whole bunch, make some, lose a bunch. I promise you that person is going to have there'll be a couple really obvious red flags. They're changing strategies all the time, which means that they don't really understand what they're doing, which means they really don't have a setup, which means that they don't really understand how to risk manage either, right? So those things all kind of go in concert. And then what you'll see is that there is kind of like all over the map with how they decide to size in. It's very consistently inconsistent with what they're up to, which makes it, again, really, really hard to pinpoint what's working and what's not working. So that's another aspect when it comes to being if you want to make the switch to being a professional trader, think of it as purely, it is a business. And my job at this business is to create a process or create a factory that produces profitable widgets for myself. Whether that is stock trading, whether that is option trading or futures trading or Forex or whatever. But what needs to be able to happen is that all of those pieces, those machines that are in my factory that work together to spit out this profitable widget, I need to know intimately how each one of those work. And those parts of those cogs of those machines are going to be things like, how do I document my trade? What is my actual setup? What is the risk management? What can I expect from this? What is the downside? All those different things that come into knowing a part of what makes the trade the actual trade. Is this price action oriented? Is it momentum oriented? Is it probability oriented? How do I figure out where I am on the playing field? Like all these various questions that you need to be able to know, that's all a part of your trade factory, right? And again, if you don't know a lot of that stuff, or you're just very loose on a lot of that stuff, it's going to consistently produce inconsistent widgets on the other end, right? In this case, we're talking about profitability. It'll be consistently inconsistent on your profitability. Another thing that you see from professional traders is they are documenting like mad, crazy people. They always have just document every tiny little thing they do with what they're doing on their actual trades. So they get very, very, very deep in the weeds on the documentation aspect of this. They can tell you, the look at their spreadsheets, they can tell you that, yeah, on this day at this time, this was going on. I know that these earnings were coming out. I know that these, this talk is coming up from the Feds. They're just very, very, very drilled into the details on that aspect of it. They deep dive their setup a lot. One of my favorite stock trading guys, name's Easy Guru, is what he goes by. He always talks about deep diving, and it truly is a way to fast track what your knowledge base is on whatever you're trying to do, is doing what's called a deep dive. And unfortunately, in the world we live in, everybody just wants shit handed to them without having to actually do the work, right? And if you want to be any kind of anything within trading in terms of profitability, it's purely a self-leadership thing, right? And most people are just incapable of taking ownership and responsibility for their self-leadership. Unfortunately, most just aren't, and that it will be a major detriment to your ability to be a long-term profitable trader. Again, it doesn't matter at all if you're good for a year and a half, 2 years. It doesn't matter, because you can get into right market conditions like we got into in 2020, 2021, that will let you do dumb things and be profitable still until 2022 comes along. And I was actually talking to a friend on a conversation earlier today, and he brought up the fact that Robinhood assets were cut in half throughout 2022. And in large part, that's based on amateur traders who are mostly using Robinhood losing probably half their accounts throughout all that, as they kept trying the same exact things that worked in 2021, right? Anything that was bullish oriented in nature. Certainly there's other factors there, people graduating away from Robinhood and using real brokers and those kinds of things. But not to say Robinhood is not a real broker, but I think real serious traders don't typically live in Robinhood, or Webull, to be honest. So anyway, that's that's a reality and a factor there, is like self-leadership, and it always comes back to that, as you got to be responsible for you, and any mistake you make, any trade you make that doesn't work out, you need to be responsible for it. And you need to know why it didn't work out. You need to know if it's just one of those, it's just a crapshoot, that was just one of those things where you just got hosed and there's really no other way around that. which I would say more often than not, there probably was signs, signals, items that if you were aware of them would have saved you from even taking the trade in the first place. Another thing that I see really common in professional traders is they don't trade. They're not taking like 30 trades a day. Okay. Take future guys out of this for the most part, but take a regular long-term professional trader. They are actually very, very picky with what they do with their trades. They're not just like willy-nilly take every single potential setup they see and just keep shooting, over and over and over again indefinitely. They're very, very selective. Another way to think of it is like, imagine, I talk about our regular group here, is imagine if you have only one trade you can do every day. If that's all you can do is one trade, I'm willing to bet you wouldn't take 80% of the trades you normally take. You'd wait until all of the stars aligned and you saw the exact setup that you're looking for, or, and better yet, you would deep dive the hell out of what your setup was so that you could really, really size into it when you finally see it, because you would know this setup works 90% of the time or 85% of the time, and I can have a really, really well-controlled risk management on this particular strategy. So those are, I would say, just right off the top of my head, some super important things. Probably one of the other biggest distinguishing differences in professional traders versus amateur traders is going to be the professional trader's awareness of what is going on within the market. So they spend a great deal of time of understanding, not predicting, but understanding the playing field by which they are operating under, right? So a lot of the worst beats that you take is usually getting in front of something when you really should not have been jumping into the market. Like, for example, not being aware, like on our hourly charts, like down here, seeing this declines, but not being aware where you are on this playing field, and then loading up on, call credits here. And then, of course, boom, you get run over for multiple days in a row because you were unaware of that. I think again, these are just huge aspects, but we'll just recap them real quick. Consistency is huge. Discipline and consistency, those go together hand in hand, sort of chicken and egg, but consistency will be your subtle maker or destroyer of your success. If you cannot be consistent with what you're doing, it will just slowly eat away your long-term discipline and profitability if you have no consistency. Okay. Second thing is documenting. Document every single thing you're doing, specifically with every trade you take. There's just no other way around this. If you want this to be a hobby, then don't document stuff. If it's just a hobby thing and just a fun little whatever, I'm playing in the markets, go right ahead. You just don't expect to have a lot of long-term success in doing this. 3 is that most traders are not trading a bazillion setups. They have 1 to 3 setups they really, really, really like, and they just look for those and wait for their opportunity and pounce when that opportunity shows up. Risk management. They know that they're going to their trade. I'm personally going to my trade expecting I'm wrong, so that I know what am I going to do when I get into this trade and how do I manage it. If you don't know how you're managing your trades, if you don't have an idea of how you manage it, whether that's a stop loss or if you're using expected moves or a probability based style trading, if you don't know what all of those things are, think about this. This is a net zero game. You're going in competing against everybody else, and for as many people who think the market's going up today, there's as many who are thinking it's going down, right? So you have people constantly competing and trading things back and forth with, I'm going to buy some shares of this while somebody else is selling some shares of it, and they have their thesis and opinions as to why those are happening. And so you better be damn sure that there are a lot of really, really smart people, individuals, and a lot of huge smart institutions who have way more information than you do to make the choices that they're going to make. So again, I would take it seriously. This is not like a game just to dink around with to get a little dopamine when you put on a trade and be YOLO full sending things and think that is, because again, that was a thing back in 2020 and 2021. People were doing that left and right and just making a lot of oddball, non-profitable choices, but it was fun. And let's be honest, that was fun for a little while there. Yeah, man. And I would say, again, documenting things, being very, very crystal clear on, all the ins and outs of your setup, how it works. I've literally never met a trader who isn't profitable or who is super profitable that does not know all of these things very intimately, right? They have a very clearly defined trade factor of how they get to their profitable widgets, and they know every little thing in between there. People who don't do that, they usually are just not profitable. They will be short term, year or two, maybe profitable. That's the extent of it. So if those things resonate with anybody and you're hearing this and you're like, you know what? Go look in the mirror, because the only, you are responsible for all your outcomes. The market is not out to screw you or go after you, and it's purposely watching your little tiny piddly things you're putting in the market. It's not doing that. It is you are in some way unprepared, or in some way missed something, or in some way did not appropriately size the way you should have, or had your risk appropriate. I mean, that is the reality. Like, take responsibility and just say, like, I am the controller of my fate in the markets here, and so I'm going to be damn sure I make sure I know that I've got all the variables that I can possibly have under control with how I'm going to do what I'm going to do, and then go forth and make lots of money. But
Yeah.
doing it half-assed is going to get you half-assed results.
One thing I wanted to say too, going back to what you touched on earlier, finding that if you only were able to trade one thing a day, because I find most people would actually be profitable who aren't, if they actually would just take one or two trades a day instead of trying to do like four or five.
Yeah.
Even like, throughout the week, somebody who has 12 different things slapped on, they might have a butterfly on SPX, and then they have a put credit spread on Tesla. And, if you're just slightly even like more bullish than bearish and the market drops 3-4% in a few days, you're going to see that like completely destroy your P&L, because you'll have so many things upside down that need worked on. You're going to not even be able to make a decision. So
Yeah.
at least for me, like, and you guys know this from watching the channel, I'm generally just in like one trade at a time, one, maybe two, right? But if there is multiple, it's on the same stock or, a similar instrument. Like if I have SPX going, I probably have another SPY one. I'm probably not doing Beyond Meat. And then the next trade I do is, a completely different company or whatever. So that's like for me, the big switch for me, because I used to, mess around with trading for fun way back in 2018, which is, not as way back as around then. And
Yeah, I would say my official kind of baptism into it was in August of 2007 was my actual, like, I started managing decent money in the markets. That was a if anybody who looked at the market in August 2000, that was a peak of the market before the major bear market came through, and that yeah, that was not a very fun time of learning how to do all that. That was a nice kick in the face, and a major wake up call of, well, this is not easy, not even remotely close to being easy to do this stuff.
yeah, so like I think about it, right? It's like you just, as much as you grow and learn, I think it's so funny to look back at when were just kind of doing it for fun or like had an idea of what was going on, to like being fully experienced and doing it full time now. So I would say that's probably my biggest takeaway for me, at least, was I used to be somebody who would put 4 to 5 trades on or be like bullish on every sector and just have a little bit of money in each one. And then, you quickly learn that, wow, my results are not as good as they could be if I just stuck to one or two things. So I just wanted to touch on that real quick. But is that everything you want to touch on in this video?
I think so. Yeah, we'll see what kind of comments you get on this, and let's maybe do a follow up and answer some more specific questions. Again, this is just right off the top of my head. I'm sure if I sat down and made a long list, there'd be a couple more things to include. Um, from trainers of tools and other things of that nature. But honestly, a big part of it is just human behavior. Really, in the market, human behavior almost works against us a lot of the times in the market, and it's once you can finally get aware of what's happening under the surface of yourself, is where many times you are able to turn that corner, and start becoming more profitable. But again, that's not a lot of people are all that emotionally intelligent these days. And that's just the way it is, unfortunately. So
Absolutely.
yeah, there you go. That's all I got to add in this one.
Awesome. Well, I appreciate it big time. I appreciate you coming on. And if you guys have gotten this far and you haven't left a like or a comment yet, if you guys could do that now, that'd be awesome. That's going to be everything for us, and we will see you guys in the next video.